Hey guys, how are you doing? Today is August 26th, and today we are going to talk about Salesforce performance for this year's Q2, and that is very bad, right? It just announced it one day before. When I first looked at the figures, I rubbed my eyes. My eyes has any problems? Because the net income dropped it 90%. What happened, right? Then finally, I also look at other commentaries, something like that. Then I'm right? That the result is very bad. And then before that, then you can still see many comments on pros and cons, right? And then now I think 90% is cons, right? That means you should sell it, right? Or at least you should hold and not buying. But from my point of view, that actually you should not hold this stock. At least then she needs to provide a way of how to improve that. We know that now the situation of no matter is in America or in Europe is not good, but should not be bad as that, right? So we will compare a little bit of Salesforce to Adobe, right? Then you can see the difference of that, right? So today you can see our title is Salesforce performance. Why so bad? Why so bad, right? And our Falcon portfolio, we know that yesterday it's been bounced up for Dow Jones and Nasdaq because the unemployment rate's been better, right? So our Falcon portfolio been rising back to 60% for past 30 months. So welcome to ask for any stock that you want me to analyze. You can leave your message under the YouTube, or you can directly email to me by Usstockmarketweekly@gmail.com. So this is our Falcon 350,000 portfolio. Then you can see our portfolio performance is 60% for past 30 months, and Nasdaq is 63%. That means 3% better than us. So this is our covering. Then you can see the cow and the word Salesforce. And then our title is Salesforce performance. Why so bad for this season? It's really very bad. Not a lot of news because they may be in the Jackson Hole holidays, right? Actually, Jackson Hole is for holiday, for relaxing, something like that. But now seems they get used to also talk about the policy, right? About the financial policy, about the investment policy, the finance policy, something like that. But originally, Jackson Hole is just for relaxing, right? So we can see that Dow Jones yesterday been rising for 322 points because the unemployment is better. Same for Nasdaq, rised at 1.67% yesterday. Okay, we look at the US 10-year Treasury bond yield, then you can see that it rised at 0.1% from 1 week before. So within this week, right, you can see that the stock market is shaking, right, going down, going up a bit, and then going down again, something like that, because the US 10-year Treasury bond yield is increased a bit. So in the past few years, a lot of people comparing Salesforce to Adobe, right? And they said that it actually their business is not completely overlapping, because I like Adobe is because of the Creative Cloud, the Adobe Cloud, something like that, right? It's not because of the customer relationship. And Salesforce, then she is famous for the customer relationship program, and the service she provided, then that's in the app, in the software, right? Of course, Adobe is also the software, but Adobe has its own kingdom. If you want to use for graphic and for creative drawing, then you have to use that software. It's not only for customer relationship, right? So actually, Salesforce is quite different from Adobe. They just overlapping in a very small area. Of course, you can see that the stock chart of both stock seems quite similar to each other. But if you look at the performance, that is totally different. For the past 5 years, Salesforce increased at 81%. But for the past 5 years, Adobe increased at 1.6 times. It's a double. And then if we further look at the PE ratio, it's totally different. Adobe now is 39 and Salesforce 168. So if you ask me which stock, I will buy Adobe. I don't think that Salesforce can survive for very long for the PE is so high, right? Because now the economy of global is not good. So how can you survive for 168 PE, right? So this is the Salesforce stock chart. Then I give a large version so you can clearly see that the PE ratio is 168. It's more than 3 times, of what Adobe is. So let us take a look at the balance sheet, right? So we know a lot of things. For the current asset, if we compare to it with beginning of this year, because this result is for the upper half year, right, from January to just end of July, and then we compare with half year before, then you can see that the current asset is more or less the same, right? Then the unit is in million. 212 21.2 billion compared to 22.85 billion half year before is nearly the same, right? And the total assets is also nearly the same, 94 billion compared to earlier of this year 95.2 billion. Then the total asset is nearly the same. And then if we look at the liability, then also nearly the same. The total current liability, right? You can see it's about 20. And then half year before is 21.7, then that's good, decreased a little bit. And for the long-term debt, that means the non-current debt, right? 9.4 billion compared to half year 10.59 billion. That's good because it decreased it. And you can see the total liability is just 34 billion US dollar compared to half year before 37 billion. Then it's good, decreased a little bit. And then this is what we should look at. If we compare for the total revenue, no matter it's subscription and the professional service, blah, 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 something like that, you can see that the total revenue in just the last quarter, that means from May, June, and July, the total revenue increased by 21.7% compared to 1 year before. That's good, right? But the terrible thing is for the cost of revenue increased at 31.8%. How can she control the costing? Seems she cannot control the costing. So we further look at the operating expense, also increased at 22.86%. That means no matter its cost of revenue or the operating expense, the increment is higher than the revenue. That means it must be a negative on the net income. But the terrible thing is, you can see the net income, just 68 billion US dollar, 68 billion compared to 535 billion 1 year before. That means it decreased by 90%. I calculated before, you no need to calculate. Right? It decreased by 90%. This is horrible. Right? Even we compared to 6 months before. Right? For 6 months, the net income is 96 million US dollar only. It just like a fast food, few shops of fast food can make this income, right? And then 1 year before, half year, right, is 1,004 million US dollar for the net income. So it decreased more than 90%. And then if we further look at their breakdown, you can see the cost of revenue. No need for you to calculate. Right, 260 compared to 184. Marketing and sales also increased, right? It really increased more than 70%. What happened? What happened to Salesforce, right? You can see the cost of revenue, research and development, marketing and sales, G&A, everything increased for more than 30 or 40%. Then, so that's horrible. Right? But if we deduct everything in between, right? Depreciation, right? And then others like the stock-based compensation, everything. And then you can see that the cash provided by the operating activities not decreased a lot. 1 year before is 386 million US dollar. And then this year, this quarter is less, 334 million US dollar, but maybe just 20% or less. But not like the net income decreased at 90%, right? It's because all of them are increasing. You can see that everything is increasing. Depreciation, and then cost of capitalization, and then strategic investment, everything is increased a lot. So I think Salesforce need have a structural problem. It's quite a structural problem. We know that for the data center, everything increased. Salary increased, air conditioning increased, the lease increased. If you need to hire anyone for the IT to maintain it, then every cost element increased. But she has to solve this problem. If she is not going to solve the problem, then the company will crash. Well, we can see that the sales and the operating income not bad. If we compare it to 1 year before, the sales up by 33% year over year. Even you compare it to one season before, for the left-hand side, the yellow bar is also increasing. And the operating income compared to 1 year before is increased. And then even compared to last season, it dropped a little bit, but not much. And then the cow performance is strong. That means the revenue is very strong. You can see at the right hand side, and then the cow, there are 2 times. That means the current cow backing in million, and then the cow revenue in million, also in Europe. Both increased to 25%, 24%, right? But the point is their proportion is small. So I have made a summary for you. Okay, we look at the third quarter's forecast first. So in the third quarter forecast, then it expect to earn 1.2 and 1.21 for one share, excluding for one-time items. And then for revenue is in the range of 7.82 billion to 7.83 billion. But if we compare it to what is now existing in the second quarter, now one share is 1.19. That means if the forecast is 1.2, that means no increment, right? And then for the revenue, and the forecast for coming quarter is 7.82. And this season is 7.72. That means no increment, right? There's no increment for that. So you can see that the stock prices tumbles because no increment. Right? That means the company cannot solve this kind of problem yet. At least no improvement for coming quarter. So you can see at the bottom is she will be the first shoe to drop, right? Okay, we drop this shoe first, right? and then we change to another tool. I always said that you have to look at least for 10 years. If you can, look at 10 years performance. If not, then at least look at 5 years. Right? So I have listed for the 10 years data for Salesforce. We can see that for total revenue, so far so good, right? 3,050, 4,000, 5,300, 6,000, blah, 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 seems all goes well, right? Okay, we also look at the cost of revenue, also steadily increasing, right? We can see that for 10 years before, the cost of revenue is also in a million, 683. And then now is more than 8,000. That means more than 10, 13 times, right? But if we look at the net income, that is the most important data that we have to look at. You can see that for the first 4 years, she is still losing. It's a negative, no income, no net income. Okay, started from 2017, then it has a little bit net income, 323 million, and then a little bit go up, and then go up quickly to more than 1,000, and suddenly it dropped it to 126, and then it goes up to 4,000, and then suddenly now it dropped it to 1,400. We cannot buy a stock like this because she is not stable for making money for the shareholders. It just like a boat in the sea. Suddenly goes up and then goes down, and then suddenly goes up a bit and then sinks far away. So you cannot buy this kind of stock. If you put your time in selecting the stock like this, then just by look at this very simple figures, then you will not buy Salesforce, right? Even for the past 5 years, you will not buy it because it's totally nonsense, right? For the net income suddenly increased it from 360 to more than 1,000, then it dropped it to 100, and then rised it 40 times, and then dropped it 60%. How can we buy a stock like that unless you are for short term, right? And then you can see that from now we work back to 12 months, 536. Well, 1 year before is 1,400. So we cannot buy this stock. So take a look on this. I do it for you and projected it for 1 year. The revenue, 30 billion, increased at 22%. And the net income, sorry about that, 19.2 is a million, not a billion, it's a million. Decreased at 90%. The on-hand cash, marketing security, account receivable, we summed it up, 18.28 billion. And the long-term debt is 9.4 billion. No matter you how to calculate, right? Even you just pay back for the long-term debt, for the interest, and for part of the capital, 19.2 million is not enough. She must use the cash on hand. Right? That means the net income she generated is not enough for her to pay back for the debt. That means the capital and interest per year. So we should give up on this stock unless she provided a very concrete idea on how she can improve and show us and prove to us she's been improved. Otherwise, drop this stock. Right? Adobe is much better than Salesforce. That's what it is. Right? This is my comment. Okay, thanks for your watching, and then please give us a like, and any comment is welcome. So please hit the subscribe button and then press the bell icon next to it. So whenever there is new video uploaded, then you will be informed. Okay, today is the weekend. I hope everyone have a very peaceful weekend. All right. See you next week. Bye-bye.